Welcome to this webinar. My name is Adam Matesti. I'm a market analyst in the UK office. I also look after some Platinum Plus and Diamond clients here at eToro. We're here with Bai. He's one of our elite popular investors. You can find him as Geofflee2006 on the platform. Bai, do you just tell us a little bit about yourself and how you sort of got into trading?
I came to the UK when I was 13, I've always been interested in math, and that translated into trading from quite a young age. But I wasn't really into the stock market at the start. I was trading sort of more like virtual items online, and I made some money off some games actually. As time went on, as I was at university, I decided to look more into the more serious stuff. So rather looking at stocks and shares, etc. That's how I started. And after I graduated, actually, I started a business which is trading related as well. It's in technology retail. At the same time, I wanted to invest the money, the profits from my retail business into something that can appreciate over time. So that's how I sort of got into the trading.
Okay.
But I'd say I'm more of a long-term investor. I look at the sort of investment over a number of years rather than short-term. Yeah.
So with your maths background, does a lot of that come into how you look at the markets? Are you very much about the numbers?
So I use some numbers in sort of my methods in terms of deciding which stocks to invest in and what's a bargain, what's not. But I'd say the math is not absolutely necessary if you're an investor, and some other qualities that are more important, I would say.
Yeah.
But it is important to also be able to do your own calculations and reach decisions of your own accord and do your own research. I think that's very important, and that requires a bit of maths.
Yeah, great. And I mean, sort of, why eToro? How did you sort of end up with eToro in the outlet to kind of, get your trading on the side with the business?
So it's quite interesting, really. I first started knowing about eToro back in 2016, just before I graduated from university. So I was, at the time, I was doing some sort of matched betting. I don't know if you know what that is, an arbitrage to try and sort of find ways as a student to make money.
Okay. I mean, if people haven't heard of that before, roughly in a nutshell, could you describe that?
Okay, so match betting is a way of turning the free bets that the companies offer you when you register to a website. For example, a website could tell you when you register that if you bet £20, then you get £20 for free.
Oh, okay.
And then it's about using math to extract the free £20 into real cash in real terms. So it's sort of a risk-free way of making money, and that's what I was into for a bit in my third year at university. And so I was looking on forums, and I came across a forum talking about eToro, and it was a popular investor actually. I can't remember the name, unfortunately, but he was talking about how he was a popular investor on the website, and the website is very good, and one of the sort of really good platforms in the UK if you want to trade or invest, and it's all very intuitive. And that's why I started using eToro, because of that article that I read, and also possibly the prospect of becoming a popular investor myself. Yeah. Because he was talking about it as a way of him getting a second income. But obviously, when I first got into eToro, I wasn't expecting to, or I didn't have the goal to become a popular investor, but just to invest my own money and try to try to accumulate as much wealth as possible on the platform. And, so that was my initial goal.
And the results kind of started coming in, and it just kind of made sense to help.
Yeah, so I think I made some good decisions overall. You can see I have a few ones that are in the red, but mostly green. I'm mostly a passive investor. Well, I'm going to talk about that in a bit because my strategy's changed a little bit because of the current market conditions. But generally, my strategy is to hold a selection of stocks that I believe will do well, and I've chosen some good ones in the past, I suppose, and it's gave me a very good return. I think over the last 3 years, it was 43% or something like that. So I'm quite happy about it, and obviously that attracted some copiers, which I'm quite grateful of. But yeah, so.
Good stuff. Good stuff. I mean, in terms of when you've sort of picked these stocks, where do you tend to look for your research? What sort of information sources would you use?
So I normally use so I look at the fundamentals more than technicals. I mean, I do think there is some merit to technicals, but I do believe that a stock's price in the long term is fundamentals only, and if you want to trade short term, then technicals would be a more of a way to go. But I think a generally less risky way of trading, unless if you're an algorithmic trader, then you look at technicals all day with computers. But if you're, I think being a retail investor, it is important to look at fundamentals of a company. And in terms of the fundamentals of the company, there's quantitative and qualitative ways of looking at a company. So you want to look at the company's balance sheet. You want to look at the relevant ratios, for example, the PE ratio being a very big one. You want to look at the company's debt, its earnings per share, and how that a company's earnings has changed over the past few years. But you also want to look at how that translates to future earnings growth. So a lot of companies might be valued quite high compared to others, and that's because people are speculating or anticipating that the company will do well in the future. One example of that is obviously AMD. AMD's done very well over the past 2 years. Actually, when I first invested in AMD, it was back in 2017, and the share was at $9. And right now it's 49, I believe. So that's quite a big increase. But the reason for that is because you go onto the qualitative side and you look at AMD's products. And the reason I invested in AMD in 2017 was because of the news that it's got a new architecture called Zen. So if you look at my sort of retail what's it called my business also deals with these kind of chips. So I have a sort of insight into how competitive these products are. And if you look at AMD's product lineup, it's currently much more competitive than their rivals' offerings, despite the fact that Intel has a much larger market share. But,
so it's kind of a combination of your own knowledge of the industry, as well as a bit of data, and then also looking at where the price is and if it's got some value.
Yeah, that's right. So you look at the balance sheet, you look at how healthy it is, if the company's got debt, if the company is going to grow, and you look at the management as well. You look at if the management is competent, if they've made good decisions over the past. For example, one example of that would be Micron, which is one of the companies that I'm currently invested in. They bought out a joint venture with Intel over a breakthrough technology called 3D Crosspoint. And I put that down as a great decision made by Micron because they had that option and they exercised it to the benefit of the company in the future. So they're making prudent decisions for the future. And I think that's very important. Yeah, so the main thing is you want to look at the company's products and you want to see if they are competitive. And I believe that's also fueled Tesla's recent rally as well, right? People are saying that Tesla's battery technology is superior. Yeah. EV is the way to go in the future, and that's fueled the rally.
Do you think the Tesla price is sustainable at the level it is at the moment? I mean, lots of people are, we've seen these very sharp moves, and both in both directions. Do you think that the value of the company where it is at the moment is where it should be, above, below?
Yeah, so I was an investor in Tesla, actually. I invested in Tesla just before it started rallying. I had to free up some cash to invest in other companies. But because that time they had a debt problem, etc. They still do. But I think Tesla is one of these companies that has a story. You know, Elon Musk is obviously loved by everyone, so there's a premium in terms of that. But most importantly, I think there's a lot of speculation going on in the market right now, given that the entire S&P has been rallying since September. Well, primarily, I think personally, my opinion, due to the Fed, with the reverse repos. But market sentiment is at an all-time high during the last 2 days. And I think in this kind of market, you get to see quite a few stocks with this kind of story, doing very well. And I think it's purely speculative. Another example of that would be Virgin Galactic. If you see Virgin Galactic, it's gone even higher than Tesla has. It's got like 200-something% increase since January.
So on these kind of, this sentiment kind of driving these stocks upwards, we're in February now, and, we've seen in the last couple of days a bit of a sell-off. I mean, looking forward into sort of 2020, at the end of the rest of the year, where do you kind of see the markets going?
So I think, obviously, there's... So I personally started, so I've been a long-term passive investor, but recently I've started actively managing my portfolio, and that's primarily due to the coronavirus that's currently spreading around the world. I do think that the economic hit from the coronavirus is not going to be one quarter only, like a lot of people are suggesting. Well, the mainstream and the stock market prices are suggesting that it's going to be a V-shaped recovery coming from GDP hit in the first quarter. And I believe the current trend, looking at how the virus is spreading it's mostly under control in China, but it's because of the draconian measures employed by the Chinese government. But I think it's spreading in Korea and Iran, especially Iran, and Italy is quite worrying. And I fear that they don't have the same sort of authority that the Chinese government does in terms of clamping down on the restriction of travel, etc. And that's going to have a real impact in terms of containing the virus. So there are some glaring downsides, which is why I started to become market neutral rather than net long. And I intend to continue that position during this period of uncertainty.
So do you think that it's more dangerous that the virus is spreading in the West as opposed to in China, because there is more danger that will keep going? So when you say about the recovery, do you think that's going to affect the recovery time of the virus?
So I think it's also about the virus. The virus is currently spreading like an influenza virus, and nobody's ever been able to stop an influenza virus before. It's got a very high transmissibility, but a lot of people are comparing it to SARS and the flu. And I think both of these are, slightly not very good comparisons. And the reason it's not a good comparison against SARS is because with the coronavirus, the new coronavirus 2019, you can be infectious even if you don't have symptoms, and that's something that is not the case with SARS. And that really, if you have a temperature sensor, it's not going to detect some asymptomatic people who are carriers. And that's going to be a real problem in terms of containment. With regards to flu, I think a lot of people are saying that flu causes 40,000, 50,000 deaths just in America every year. But the problem with that is that this coronavirus is a shock to the economy. It's very sudden. And there's, unlike the flu, where the public health system is able to cope with it every year, there's not the resources. There isn't the resources currently to combat the coronavirus, and also that the serious complication rate of the coronavirus is very high.
Yeah. Sorry, we had a little bit of a technical problem there. No, okay. Yeah, sorry.
So let me continue.
Yeah.
Okay. So the serious complication rate of the coronavirus is very high. So as you can see in Wuhan, the hospitals are overwhelmed because 15% or 10 to 15% of people require a hospital bed.
Yeah.
And that's not nearly the case with the flu. Even if you don't compare the death rates, which is 0.1% for the flu compared to about 1 to 2% for the coronavirus, just the fact that there's so many people, if it does spread, there's so many people that require hospital treatment, that's going to overwhelm any local healthcare system.
Yeah.
And that's the main problem that I think why you can't compare this to the flu. Is because of this serious complication rate. I do believe the economy is going to rebound eventually. Yeah. Whether that's V-shaped or U-shaped remains to be seen. But I'm personally not as optimistic as a lot of people in terms of this. Well, these are my reasons.
Yeah, I mean, so look, sort of going back to sort of your views and how you sort of see things panning out. I mean, at the moment you're copied by over 1,600 people, and they're obviously getting a bit of an insight as to how you're viewing the market. I mean, what would you say, on balance, not necessarily whether you're buying or selling right now, but which instruments are you monitoring, at least in particular, based on the current climate?
So currently, I'm monitoring the major indices around the world. So the German DAX, the US stocks, which I'm obviously got exposure in, the China, the CSI 300 index. I think that's a good way of looking at Chinese investor sentiment. And interestingly enough, China is the epicenter of the outbreak, and the CSI has done better than most. Than the Japanese and the Korean and the European stocks since the outbreak started. And I think that's partially attributable to the monetary policies of the Chinese central bank. And in fact, after the end of the Lunar New Year, the whole index went down by about 8.6%, I believe, on the first day. But for a whole week afterwards, it's just been rallying due to the liquidity injections from the central bank. But I think the economic situation in China, no matter, I mean, a central bank can cut rates and help businesses, but in the end, if people don't go back to work, well, they're currently starting to go back to work. But if you see the sort of travel sort of congestion rate in Shanghai with the metro and the traffic, it's nowhere near how it was just a few months ago. Yeah. So a lot of people are still staying at home, and obviously all of that translates to economic damage. Yeah. And I think that's going to be evident in the figures that haven't come out yet, but are going to come out in the next few weeks to a couple of months.
Yeah. So you touched on that. That's how you're changing your strategy from sort of net long to market neutral. Where does those changes come in?
So I started shorting the NASDAQ index. Instead of buying, for example, past bond, US Treasury or gold, I do believe that gold prices are quite elevated at the moment, same for bond prices. But you see the bond yields have been decreasing or plummeting, really, since the start of January. So the bond market has been flashing warning signals since the start of January, despite the fact that the stocks have been rallying non-stop until well, about a week ago. So yeah, well, 30-year Treasury yield is at an all-time low, actually. So I didn't go into gold and bonds because I think they're a little bit overvalued right now, and I feel that the NASDAQ short would be a more direct hedge against my long positions. And if the market does go down further, which I do anticipate, then I'll be trimming those short positions to stay market neutral and reinvesting that into the current stocks that I have.
Yeah. So I mean, what was the trigger to kind of make you start taking out short positions? Because you say that most people tend to always go long. What made you sort of move into this position? Was it just the conditions in the market, or?
So it's mostly due to the fact that I believe coronavirus will have a larger impact on the global as well as Chinese economy than most people believe. and that will, I believe, translate to a loss in the stock market.
Yeah, and you did want to mention sort of an area of the market in particular that you have been following, which was the semiconductor industry.
Yeah.
We're just going to go and pull the chart up on that now.
Okay.
So yeah, but just tell us a little bit about the industry and why you're looking at the moment. This is a chart of Micron. So we're going to just give us a bit of an idea as to why you're following this one at the moment.
So there is a reason that I didn't, that I started going market neutral in the way that I did, rather than close all my positions and keep cash, for example. And the reason is because I still want to take advantage of the long-term trends such as AI and 5G. So Apple has been rallying recently due to the belief that 5G supercycle will charge the iPhone handset sales. And I believe a better way of investing in 5G would not be through companies like Apple, but rather the companies that make components for Apple. For example, two of my biggest investments in the semiconductors are, one of them is Micron, and the other one is Western Digital. And they're very similar in terms of what they do, but distinctly different in a way. So Micron makes DRAM, which is dynamic random access memory. So the memory modules you might see in computer or smartphones. So they do that. And Western Digital makes flash drives, so SSDs. And they're also a traditional HDD maker, so the mechanical drives that you might find in older computers, they also make that. So this is a chart of Micron, and I want to talk about the semiconductor cycle that I'm trying to sort of follow over the past few years. So the semiconductor cycle is something that happens every few years due to demand and supply imbalance. So recently, you can see in 2018, the stock rallied from under $10 to 60, a 6 times increase, and that's because in anticipation of the price increase of DRAM modules, a lot of Micron's customers, including Apple, they've been building up inventory, and they've been buying DRAM by the boatload. But then they realized that they had too much inventory late 2018, so they stopped buying. Obviously the supply from the large manufacturers, they're going to stay the same because DRAMs are fabricated in these sort of clean rooms, or like lab-like places where you have a certain number of wafers, and you can't really increase the amount of production. You can only decrease it, and even decreasing it requires a lot of work. All of it is sort of a lot of it is premeditated, so the management has to be good to know how much to produce, etc. So you can see that the stock plummeted from 60 to 30 in late 2018, and I entered my position at around $42 late September, I believe. Obviously, the situation continued to deteriorate because the S&P 500 actually had a 20% pullback late 2018. And Micron was a victim of that as well. Well, there's a causation between the two. One causes the other, but vice versa as well. So since the start of January 2019, the global DRAM demand has been bottoming out. So it bottomed out last quarter, according to a lot of analysts and the management of a lot of companies like Samsung, including Micron. So the stock prices are usually moved in anticipation of demand coming. So the bottoming out what has happened very recently, I believe, and I want to continue to ride the cycle up as global demand for DRAM increases, and that increase can become something of a secular trend, hopefully, because of AI and 5G and all of that long-term sort of tailwinds. So I want to continue to take advantage of that, and that's why I continue to invest in these stocks. But I also want to hedge myself against the downside risk of coronavirus, and that's why I decided to stay market neutral and employ my current strategy.
Okay. I mean, do you know what? Sort of tying on with this, we've got a question from Vince B. He's mentioned Nvidia and Micron.
Yeah.
They slipped another 3.5% today.
Yeah.
So to come to almost 10% in the last 2 days,
yeah.
Is this the time to buy? You know, so I mean, you've mentioned sort of on Micron, sort of bigger picture. What do you think about these levels on Micron and Nvidia as well? If that's one that you've been following.
Okay, so I think the reason for the dropping Nvidia and Micron are different for today. There's been a 2-notch downgrade by Bank of America today on Micron stocks, citing near-term weakness, likely due to the coronavirus. But my view of Micron and the coronavirus is that because South Korea has the 2 largest DRAM manufacturers in the world, Samsung, SK Hynix, if they do get disrupted in any way whatsoever, Micron is going to benefit from this because if there is going to be supply issues from these 2 companies, then that could translate to market share gained by companies like Micron. Obviously, that's a bit speculative, but I do believe that there's an element of well, it's an educated guess, I would say. With Nvidia, I believe the drop. Well, Nvidia has dropped quite a lot over the last 2 days with AMD, and I think that's due to the recent market rallies of both. Really. They both have very high valuation, but I continue to be invested in them because I believe their product portfolio, especially Nvidia, I believe that their new series of graphics cards, the Ampere, are going to be much better because they're going to be based on a 7-nanometer process rather than the current 12. So it's going to attract a lot of demand that might not be perhaps that's going to drive up the earnings. But in the near term, obviously that's happening later this year in the second half. But in the near term, we should expect a greater pullback from these sort of higher valued companies rather than valued stocks.
Just got a couple more for you just before we run out of time. The first one is from Adam B.C. Smith. He's asked, how have you found it being part of the PI program when in fact you are actually one of our youngest PIs as well? What would you, how have you found things?
I think there's a sense of responsibility, but I think it's great to be a PI. Well, managing other people's money is always, I try to continue to do my investments, to see it as my own money rather than other people's money. I think I think being one shouldn't really be affected in terms of how they approach the market, and they should use the things that worked before that could continue to work now, and that's what I intend to do. Yeah. And
just another one here that just sort of follows on from this is that from Christian C, if they're able to copy you today, would you suggest to copy the open positions as well? That's always an option when you start
so always copy open trades because my holdings or my portfolio is a long-term hold, except perhaps the short position, but always copy open trades. Because I'm not a short-term trader, I don't open and close trades in a small period of time.
Okay. Now, look, thanks very much for your time, Bai. Great to have some insight from you, and everyone. The link to this webinar is going to be able to be on demand as well, so you can rewatch it again. You will also find the link to the eToro Trading School as well. If you want to take part in a course and learn how to trade, there is a link on there as well. You can also just punch in eToro Trading School into Google, and you'll find the list of courses, both online and also classroom courses that we do on there as well. But thanks very much for listening, guys. Take care.